Well, it just announced the Federal Reserve they are not increasing rates. And by the sound of it, it doesn't look like they're going to do that in any time in the future. So let's take a little bit of a deep dive what's going on behind the scenes. Federal Chairman Powell, he just came out. He's basically the grand poobah of the Federal Reserve, and he says we are not increasing rates. And then I just watched about a half hour, 45 minutes of his talk to the press, and it does sound like they're liking the path of where things are taking us right now. But the one take out of this I really want for you guys to focus in on is a lot of these things we're seeing in the media right now is saying the federal government is out of control right now. They are spending and spending and spending. There's going to be a massive dump of government treasuries hitting the market. So let me explain what's going on, and let me explain to you how this is affecting rates as well as mortgage rates. So mortgage rates and most interest rates are tied to some kind of bond. Okay, you watch the 10-year Treasury. A lot of people watch that to see what's going on with mortgage rates. Here on my channel, you guys understand we watch the mortgage-backed security bond. But what's happened over the last few years is the Federal Reserve, they were in the market of basically buying up all government bonds and all mortgage-backed bonds. They're buying and buying and buying. So what that does is it creates basically a pressure to bring up the prices of these bonds, okay? So how bonds work is the higher the price, the lower the yields go. So the Federal Reserve was in buying these things by the billions each month, okay? Putting in pressure on the prices to go up, okay? So now what has happened, they're not buying anymore. They're actually selling bonds into this market. So let me put a little emphasis on this. We have the government that is way overspending, and you're going to start seeing a lot of this hitting mainstream media right now, where the government is just pumping billions and billions of bonds into the market to fund the government. Okay, that's why I'm not a proponent of sending money all over the world to help everybody, help students, help everything else. And I know what you guys are going to say, Dan, you're just, you're mean or whatever else. No, folks, we don't have the money. Okay, so if you look at our federal deficit, we are trillions of dollars underwater. So now what happens is when they start giving away money and incentives and bonuses and all this stuff to governments and with the student loans and all this other stuff, we don't have the money to give that money out. So what we have to do is we have to issue bonds. So they're issuing billions of dollars worth of bonds, government bonds, into the economy, into the investment community. Okay, so that's throwing a ton of bonds or supply into the market. Okay. So the next thing is we have the Federal Reserve. He just came out today and said specifically, we are significantly reducing our holdings. Okay, what that means is all those bonds they bought over the last few years to drive up the prices and the yields down to basically zero, now they're starting to sell these things. Okay, so now we have the government issuing billions of dollars worth of bonds to fund the government. We have the Federal Reserve selling bonds into the open market. What's happening? What's like 2008 when there was a big, huge supply or glut of homes hitting the market? What happens when you have too much of something? Well, the price goes down. Okay, so that's what we've been experiencing over the last 6 months or more. There's more and more bonds being issued by the government and the Federal Reserve and corporations out there driving down the prices because there's just so much of it driving down the prices and the rates up. So that's basically the backdrop of what's going on right now. So I think Federal Chairman Powell liked a lot of the data that was coming in this week. The stock market is really liking his comments. You can see the Dow, the S&P 500, and NASDAQ are all up. Let's see what's going on with bonds. You're going to probably see those dropping. The other day, the 10-year Treasury was on the peak of 5%, or it hit 5%. Look, it's almost down 0.25% within the last 5 days. Check oil, just to check on oil. Oil the other day was about $90 a barrel. It's now $80. So a lot of the markets are liking this. Let's see what the mortgage-backed securities market are doing. It's this right here. This is mortgage bonds and what's taking place. Right there is the price of the bond. And right over here, if you squint, mortgage-backed securities are up 75 basis points. That means yields and rates are going to start coming way down. Okay, so we like this data. The economic calendar is showing cracks in the foundation of a lot of areas. We have the consumer confidence came out yesterday. Last reading was 104, it came in at 102. You had payroll. Payroll numbers came in, they're expected to come in at 150,000, came in at 113,000. So less people are getting hired. The next thing we have here is manufacturing is starting to go down. The JOLT index, how many job openings there are, that's staying stagnant. Not a lot of people or there's not a lot of job openings, so there's not a lot of transition in employment right now. Nothing but good news there. Let's go over to mortgage rates, see what they're doing. We have mortgage rates right now, just as of today, down about 1/8% today. So if you're out there, you're one of our borrowers out there and you're watching this, we got your back. We're watching this on a daily basis for you. Actually, we watch this on a minute-by-minute basis for you. So my name is Dan Frio. I do this economic video. Basically, I try to do it every day to inform you guys everything real estate. If you're out there and you're like, hey, Dan, I'd really love to see if you can help me maybe buy my first house, we would love to help with that. So what do you need to do? You go to our website. It's therateupdate.com. Here it is. If you'd like to reach out to us, we'd love to answer any questions that you might have if you're out there looking to buy your first home. I hope you understood now a little bit more how the Federal Reserve works, how bonds work, and basically how the governments run. Thanks so much for watching. God bless. I'll see you next time.